Good afternoon. Welcome back to the Genius Multi channel. We're going to tear through a pile of headlines today, generating all kinds of conversation and distractions. We're probably going to get sidetracked here and there, but the overall general theme of today is going to be taking a look at the US dollar, which has been rallying for quite some time. We've seen what people are terming all-time highs, 20-year highs. We've seen the praise and as well as the criticism of the dollar's current status. We discussed briefly in the last episode about, or 2 episodes ago, about how our dear friend Paul Krugman was saying the dollar needs to be weaker and it's better when it's weak. And it looks like he might get his way soon enough. And this is definitely something, as you metal enthusiasts out there and stackers, gold hawks, silver hawks, and any of you out there in the stacking community are going to want to pay attention. So strap yourselves in, pour yourself a cup of coffee or tea, whatever your choice may be. For some of this news, you may need something a little stiffer, like a gin and tonic or something like that. But let's just get right to it. So we've got a little chart here. This is gold over the last 5 days. As you can see there, it's been going up quite steadily, bit by bit, day by day, dollar by dollar. And all that really is a reflection of the dollar's current decline ever since the Fed made the decision to keep rates as they were and predicted seeing some slowing of growth as they came out of their meeting with the oracles. So that's going to be a foundation of what we're going to talk about today, but there definitely is some other articles we're going to want to get to. One of them I'm going to go through real quickly here. It's Fighting the War on Terror by Banning Cash. It's from the Demise Institute. Of course, governments are good at one thing and one thing quite well, and that is infringing upon rights, banning liberties, and spying and prying. And here we go. It was just a matter of time before Western governments used the trumped-up war on terror as an excuse to drastically ratchet up the very real war on the use of cash and personal privacy, what they are waging against their own citizens. Taking advantage of public anxiety in the wake of the attacks on Charlie Hebdo and a Jewish supermarket, France has taken the first step, it seems. So they're looking at, yes, taking... This is nothing new. I mean, governments have, over the last century especially, have done things similar to this. But let's just keep going here. These measures, which will be implemented in September 2015, include prohibiting French residents from making cash payments of more than 1,000 euros, down from the current limit of 3,000 euros. Given the parlous state, I'm sure they're trying to say perilous, state of the stagnating French economy, the limit for foreign tourists on currency payments will remain higher at 10,000 euros. Down from the current limit of 15,000 euros. And I want to get to the end here. Okay. French authorities will also have to be notified of any freight transfers within the EU exceeding 10,000 euros, including checks, prepaid cards, or gold. Of course, because gold is, like they've said in the past, you pay in gold or cash, you're most likely a terrorist, which I find completely untrue, as I am not a terrorist. However, I do prefer to pay with cash. And if possible, it'd be nice to be able to pay with metals. But you can see the noose, it tightens on all of our liberties. Yes, there was a comment on one of these articles regarding Bitcoin. Yeah, that's quite the possibility. Even though it's, I'm not the biggest fan of Bitcoin, it's definitely an avenue that individuals looking for other ways of exchanging over there. It's definitely a medium or a vehicle they could utilize. Unfortunately, if you live in France and you're watching this, I'm sure it's going to spread to the rest of the the EU, European Union, and it's going to be quite difficult to purchase gold without letting the state know. And that's quite unfortunate for all of you there in Europe. All right, our dear friend Peter Schiff, he won't back down. He's saying the dollar's going to crash. Buy gold. That's the theme here on the Genius Multi channel as well. I typically will echo anything Peter Schiff says. I have a lot of respect for the man, his education, and the facts that he likes to base a lot of his opinions on. I think he's logical. I think he's intelligent. And I don't think he has any ulterior motives for saying most of the things that he says. He's not trying to sell us anything. Yeah, of course he sells metals, but guess what? There's a lot of places I can get metals. I've never bought metals personally from Schiff, and I doubt that he makes a killing off selling metals because the markup is just not there. And I genuinely believe that he himself is committed to economic truth, and he's genuine in his beliefs. I've yet to be proven wrong in that. So, however, I think a lot of the other people that you see on the financial networks are selling us something else, typically a bag of tricks, bag of lies. But let's see what he says here. I got a clip from the article for all of you, and we're going to read it here. The dollar index has risen for 9 straight months and recently hit a 12-year high versus the euro, as all of you guys are aware of. The greenback's robust rise caught a lot of traders by surprise. For years, the conventional wisdom was the dollar was heading down the tubes because of America's runaway debt and the Fed's easy money policies. Now, sentiment has swung 180 degrees to where everyone, it seems, is bullish on the almighty dollar. And we've talked about the reasons for that bullish belief here on the channel before. You know, it's, again, I'm going to always repeat it, the leper with the most fingers left. It just happens to be the one currency out there that has a little bit less disease than all of the other ones in this currency war that we are in. We've covered the currency war, the deflation race. Yes, there's deflationary measures taking place globally, and so everyone's running to the dollar. Well, it looks like the Titanic might have a hole in it. It may have struck an iceberg, and it could sink. So if you're on the dollar, I mean, look at, this is a perfect opportunity. When everyone else is doing one thing, you might want to look the other way. So when the crowd, the stampede is running towards the dollar, turn and run the other way, or walk. But this is a very good opportunity, I think, with metal prices where they are and the strength of your dollar. If you have some of those bills stuffed in your wallet, that paper, that diseased currency, it's a great opportunity to lock in on metal prices at a discount. So try that out. The reality, according to Schiff, is the U.S. economy has not recovered and the Federal Reserve is not going to raise rates anytime soon. As we've stated, they just can't do it. We're in too much debt. So there's a little bit of input from Schiff there. Let's move on. Fears of Greek debt default overshadow European Union gathering. Heard a story on this on NPR this morning. Of course, Greece is back in the news. They're having some issues, having some problems. Brussels, a day before nearly $2 billion in debt becomes due for the repayment by Greece's nearly bankrupt government, European leaders gathered in Brussels on Thursday for a long-planned summit, meeting now overshadowed by the mounting risk of a Greek default and revived fears about the future of Europe's common currency. The Greece situation and the troubles between Greece and Germany, which Germany is the economic powerhouse of the EU, those troubles have been brewing, are still brewing, and they have not gone away. So pay attention to that. That's definitely something in the news, and it's one of the reasons for dollar strength. This chaotic and volatile environment, these closed-door meetings, and these uncertain times that surround and shadow the euro are one of the reasons that it itself has plummeted and the dollar has become more appetizing to investors. My opinion, anyways. So HSBC, this is the beginning of the end of the US dollar's bull run. Nothing may be left to sustain the rally. Now, this article came out after Peter Schiff's statements. So he may be right. All right, let's take a look here. This is the U.S. dollar. In a note to clients, HSBC's David Bloom argues that the U.S. dollar's bull run is nearing its end. Here's the U.S. dollar surge from mid-2014. Look at that. And during that entire time, what's been happening with metals? What's been happening with oil? Both of which are denominated or valued in U.S. dollars. So it's obvious we're at a point where the dollar is very strong, and that little basket of commodities that you and I hold fairly dear, silver, gold, copper, platinum, and palladium, those values have come down to levels because of this. So this is a great time, but we talk about ratios. silver gold ratio, when it gets to 41, you can jump over and sell some of the silver to buy some gold. Well, this is a ratio right now. Look at this as a dollar gold ratio. That's what I would say. If it's 1150 to 1, if it takes 1150 or 1180 green US dollars to get 1 ounce of gold, that's a great opportunity to make that jump, make that transition, take advantage of that ratio, because it could be 1800 to 1, 2000 to 1 in no time at all, especially if this is the peak and we see the dollar drop back to very unhealthy levels, because I'm actually surprised at how strong gold has remained in light of this rally here. You would think with the dollar being as strong as it's been that gold would have plummeted back to $700-800 range, and it did not do that, as was predicted. Remember, we covered that in a video in the last 2 or 3 months. I put up some articles for you that quoted people who were calling for gold to plummet back to those levels we had seen in the past. And guess what? It didn't happen. It didn't happen. Instead, gold has been rising. So here's some reasons that he has for the dollar peaking out. You can look at those real quick. The cycle is surprisingly Euro US dollar bullish. The economic surprise index for the Euro area has been significantly outperforming the US economic surprise index in 2015, a reversal of 2014. I'm not going to read through all of these, but as you can see, these are the reasons that he is stating for his ideas on why the dollar has pretty much peaked out and will likely go down from here. Well, look at this. The US dollar is now nearly the world's richest currency. Well, there's really only one place to go once you reach the top, and that's down. What goes up must come down. Holds true for these currencies, and I believe the US dollar is overvalued, and we're going to see it come down from these levels. And of course, it could happen precipitously. It could happen overnight. You could wake up tomorrow morning, and it's too late to make any of the decisions you would like to have made today. Remember the old adage, the best time to plant a tree was 20 years ago. The next best time is today. All right, here we go. We're going to come back. Let's do some, we've covered this before. Canada, one of the world's most vulnerable large economies. We've covered Canada and its financial situation, its economic situation a couple times. Every once in a while we'll come back and review it and talk about it. I didn't cut out the whole article here, just wanted to quickly raise some awareness and share this headline because I found it interesting that Canada is considered now one of the world's most vulnerable large economies for lots of reasons that we've talked about, whether it's its housing, the state of its currency, its social welfare programs, etc. Something to keep in mind, something to look at, just another tidbit of information. Well, gold futures erase this year's losses on the dollar decline. So you remember all those cheerleaders, the anti-gold cheerleaders, the gold bears that were, proclaiming victory over its demise and its fall. Well, they shouldn't be cheering yet because the year's not over. And the headlines that we saw that were claiming gold had lost all of its year's gains, well, those are invalid because it made up for them quickly with the dollar's decline recently. So we had people, shift saying, yeah, the dollar could fall, HSBC talking about it, and now it's been happening, the dollar's been dropping, and well, lo and behold, what did gold do? Reversed its downward trajectory, reversed its trend, and now it's upticking. So all last week and earlier, when I was saying that gold it's reaching some levels we should be buying in at and locking in at, as well as silver. Hopefully some of you guys, and I know I saw some comments, some of you went out and locked in, bought some metals, took some possession of some physical. You made the right choice. I think I'm positive you did, because look what's happening here. Gold erased its 2015 losses and posted the biggest weekly gains since January, as declines for the dollar boosted the metal's appeal as an alternative investment. Silver climbed the most this year. So there you go. If you watch the Junius Maltby channel, you have seen the theme. We knew this was going to happen, and I don't think we've seen the end of it. This could be there. This is the incipient stage. It's the beginning. of a change in the weather, I believe. Well, China, I believe, is paying close attention, most likely closer attention than a lot of the Western governments, on these currency movements, on the currency wars, and the direction things are taking. So what's China doing? Well, Barclays expects China's share of global gold market to rise sharply. And there's some reasons for that. As you all know, China has a tremendous appetite for the yellow metal. They are, in my opinion, gold hawks as a nation. The British banking firm Barclays expects China's share of the global gold market is likely to rise sharply, as it is one of the few countries where demand is likely to continue expanding over the next 5 years. By 2020, it could be consuming almost half of the world's gold output. What will this do for metals, gold in particular? Drive it up, I believe. Yes, spot gold rises in volatile dollars. After the first LBMA gold price, China forecasts to buy 50% of annual output by 2020. Here's another clip regarding the same information over the next 5 years. Barclays analyst Suki Cooper believes China could be consuming half the world's gold output, a level of total world supply its households currently achieve when combined with demand from consumers in India, the world's historic #1 gold buying nation. So it really doesn't matter what your opinion, what Western opinion is of gold. The price of gold could be entirely dictated and increase in its value based on Eastern demand alone. So the naysayers, the anti-gold individuals in the West who believe it to be a barbarous or an archaic relic, you know what? Their opinion is nullified by the opinion of billions upon billions of other individuals and entire nation states. Well, the dollar resumes its slide. This is Monday. This is today. This is current news. Stocks and oil prices rebound, of course, because why? They're denominated and valued in dollars, as well as gold rose as well. Reuters, the dollar fell further on Monday, that's today, adding to its steepest weekly drop in 3.5 years, after the Federal Reserve indicated last week that a rate hike is likely to come later rather than sooner. I believe never, or not likely at all. Again, helping drive up oil prices and U.S. stocks. So, man, I wish I bought 4,000 gallons of gasoline just to keep on hand. It would have been nice to buy it so cheap. Alright, well, gold steadies on weaker dollar post-Fed caution. You know what? Again, the theme, another headline reiterating what we've discussed. Gold is becoming firmer. I think that this is it. This is the change that we've been talking about was likely coming. Now, not to say there could be a temporary correction in the week or two from now, but overall I believe we're seeing, like I stated earlier in this video, the incipient stages of what is coming. Gold steadied on Monday following a 3-day rally that pushed it to its highest in 2 weeks as a weaker dollar and caution from the Federal Reserve on the timing of a possible hike in U.S. interest rates generated modest investor interest. Okay, I'm going to get back to China real quick because guess what? The U.S. dollar being the world reserve currency, as we've stated, could easily be threatened. Now, we've talked about this before. We're in a currency war, right? Well, China wants the yen to be the world's reserve currency. And there are things taking place and developing in China and in other countries that are going to start to challenge the monopoly that the United States holds in regards to a world reserve currency. And what that's going to do is directly threaten the strength of the US dollar and the purchasing power or the ability of investors and individuals who hold a majority of their wealth or assets or worth in US dollars. Will the Shanghai International Gold Exchange facilitate gold inclusion into the SDR? This is a big question, and it could have a tremendous effect on gold, the price of gold, the value of gold. The Shanghai International Gold Exchange was launched in September 2014 to internationalize the Chinese gold market and the renminbi. The timing of the launch is quite remarkable, though, in the context of changes in the international monetary system. This is from Reuters. Okay, Chinese yuan at some point would be incorporated in the International Monetary Fund's special drawing right currency basket. IMF Managing Director Christine Lagarde said, "It's not a question of if, it's a question of when." Well, ladies and gentlemen, if this happens and gold is included in the basket, and you just saw the demand for gold in China is strong, I believe this is going to happen. And we know that China has been positioning themselves over the last decade as a tremendous buyer and procurer of gold. This could be that switch. This could be the kill switch on the dollar. This could be the up switch on gold. The reason the current IMS is up for revision is because the global fiat experiment has failed miserably. Having exclusively fiat currencies circulating within countries without any anchor to a non-fiat reserve currency is simply not sustainable. In shaping a new IMS, the designers will be mistaken to create a system based on a basket of solely fiat currencies, which have just proven to be ineffectual. Gold could provide credibility and strength to the SDR, which is why I believe China will do it, as well as Russia in cooperation with them. This right here, these last several articles, if you're still holding on tight and you're still buckled up, sipping your coffee, paying attention, watching this channel right now, the last couple slides we just threw up there and talked about, that's the reason for a lot of the, well, violence and war talk that's taking place. A lot of the conflicts and pre-conflicts and proxy wars that are happening all around the world. It's getting down to that, to war. You know, when diplomacy fails, and we've seen currency wars, we've seen the talk of the trade wars, all this stuff's been in the news. And well, the powerful, those powerful elites do not like it when they are threatened. And the monopoly they hold, the world reserve currency, is indeed being threatened. So all you can do and all I can do is hope for the best, buckling up like we do, and keep stacking and exchanging those paper bills, those dollars for metals, and try to just stay out of the light, out of the limelight. Just stay safe. Stay safe. Keep stacking. Grow a garden, and do good things. Hope for the best. And thanks for being part of the Genie Small P channel. Thanks for your support and always being there for the channel. Pop your comments down below. Don't forget to like, subscribe, to share, and to, as always, try to find us on Instagram, where we're hanging out as well, occasionally. Have a good day.